Welcome to Middle Class Matters, Business News in English from Dr. CMA ALAGESAN. Let's see the Adani Hindenburg Report on Adani Group companies. Part 2. AMI Corp played a key role in the 1MDB international fraud scandal that resulted in US $4.5 billion being siphoned from Malaysian taxpayers. AMI Corp established investment funds for the key perpetrator that were simply a way to wash a client's money through what looked like a mutual fund, according to the book $1 Billion Whale, which reported on this scandal. Delivery volume is a unique daily data point that reports institutional investment flows. Our analysis found that offshore suspected stock parking entities accounted for up to 30 to 47% of yearly delivery volume in several Adani listed companies, a flagrant irregularity indicating that Adani stocks have likely been subject to wash trading or other forms of manipulative trading via the suspect offshore entities. Evidence of stock manipulation in Adani listed companies shouldn't come as a surprise. SEBI has investigated and prosecuted more than 70 entities and individuals over the years, including Adani promoters, for pumping Adani Enterprises stock. A 2007 SEBI ruling stated that the charges leveled against promoters of Adani that they aided and abetted Ketan Parekh entities in manipulating the script of Adani's stand proved. Ketan Parekh is perhaps India's most notorious stock market manipulator. Adani Group entities originally received bans for their roles, but those were later reduced to fines, a show of government leniency towards the group that has become a decades-long pattern. As per 2007 investigation, 14 Adani private entities transferred shares to entities controlled by Parekh, who then engaged in blatant market manipulation. Adani Group responded to SEBI by arguing that it had dealt with Ketan Parekh to finance the start of its operations at Mundra port, seemingly suggesting that the share sales via stock manipulation somehow constitutes a legitimate form of financing. As part of our investigation, we interviewed an individual who was banned from trading on Indian markets for stock manipulation via Mauritius-based funds. He told us that he knew Ketan Parekh personally and that little has changed, explaining all the previous clients are still loyal to Ketan and are still working with Ketan. In addition to using offshore capital to pack stock, we found numerous examples of offshore shells sending money through onshore private Adani companies onto listed public Adani companies. The funds then seem to be used to engineer Adani's accounting, whether by bolstering its reported profit or cash flows, cushioning its capital balances in order to make listed entities appear more creditworthy, or simply moved back out to other parts of the Adani empire where capital is needed. We also identified numerous unlisted related party transactions by both listed and private companies, seemingly an open and repeated violation of Indian disclosure laws. In one instance, a Vinod Adani controlled Mauritius entity with no signs of substantiative operations lent INR 11.71 billion, that is US dollar 253 million at that time, to a private Adani entity, which did not disclose it as being a related party loan. The private entity subsequently lent funds to listed entities including INR 9.84 billion, US dollar 138 million at more recent, substantially lower exchange rates to Adani Enterprises. Another Vinod Adani controlled UAE entity called Emerging Market Investment DMCC lists no employees on LinkedIn, has no substantive online presence, has announced no clients or deals, and is based out of an apartment in the UAE. It lent US dollars 1 billion to an Adani power subsidiary. This offshore shell network also seems to be used for earnings manipulation. For example, we detail a series of transactions where assets were transferred from a subsidiary of listed Adani Enterprises to a private Singaporean entity controlled by Vinod Adani, without disclosure of the related party nature of these deals. Once on the books of the private entity, the assets were almost immediately impaired, likely helping the public entity avoid a material write-down and negative impact to net income. Adani Group's obvious accounting irregularities and sketchy dealings seems to be enabled by virtually non-existent financial controls. Listed Adani companies have seen sustained turnover in the chief financial officer role. For example, Adani Enterprises has had 5 chief financial officers over the course of 8 years, a key red flag indicating potential accounting issues. The independent auditor for Adani Enterprises and Adani Total Gas is a tiny firm called Shah Dantandriya. Shah Dantandriya seems to have no current website. Historical archives of its website show that it had only 4 partners and 11 employees. Records show it pays INR 32,000, US dollar 435 in 2021 in monthly office rent. The only other listed entity we found that it audits has a market capitalization of about INR 640 million, that is US dollar 7.8 million. Shah Dantandriya hardly seems capable of complex audit work. Adani Enterprises alone has 156 subsidiaries and many more joint ventures and affiliates. For example, further, Adani's 7 key listed entities collectively have 578 subsidiaries and have engaged in a total of 6,025 separate related party transactions in financial year 2022 alone, as per BSE disclosures. The audit partners at Shah Dantandriya, who respectively signed off an Adani Enterprises and Adani Total Gas annual audits, were as young as 24 and 23 years old when they began approving the audits. They were essentially fresh out of school, hardly in a position to scrutinize and hold to account the financials of some of the largest companies in the country, run by one of its most powerful individuals. Gautam Adani has claimed in an interview to have a very open mind towards criticism. Every criticism gives me an opportunity to improve myself. Despite these claims, Adani has repeatedly sought to have critical journalists or commentators jailed or silenced through litigation, using his immense power to pressure the government and regulators to pursue those who question him. We believe the Adani Group has been able to operate a large flagrant fraud in broad daylight, in large part because investors, journalists, citizens, and even politicians have been afraid to speak out for fear of reprisal. We have included 88 questions in the conclusion of our report. If Gautam Adani truly embraces transparency as he claims, they should be easy questions to answer We look forward to Adani's response. Initial disclosure. After extensive research, we have taken a short position in Adani Group companies through US traded bonds and non-Indian traded derivative instruments. This report relates solely to the valuation of securities traded outside of India. This report does not constitute a recommendation on securities. This report represents our opinion and investigative commentary, and we encourage every reader to do their own due diligence. Please see our full disclosure at the bottom of the report. Introduction. India is home to many of the world's most brilliant entrepreneurs, engineers, and technologists, and is emerging as a global superpower. However, the country's economy has been held back by the broken state of its capital markets. Criticism of India's elite businessmen and politicians has increasingly resulted in journalists being imprisoned or outright murdered. Stock market analysts have been arrested for writing negatively about companies. Amidst this climate of stifled expression, corporate fraud has largely gone unchecked. In this report, we highlight what we believe to be one of, if not the most energious example of corporate fraud in history. We have uncovered evidence of brazen accounting fraud, stock manipulation, and money laundering at Adani, taking place over the course of decades. Adani has pulled off his gargantuan feat with the help of enablers in government and a cottage industry of international companies that facilitate these activities. These issues of corruption permeate multiple layers of government. According to numerous sources we spoke with, Indian securities regulator SEBI seems more inclined to protect the perpetrators than punish them. We view sunlight as the best remedy, and we hope this report helps illuminate these issues further to that goal. We hope Adani addresses the 88 questions we have included in the conclusion to this report. Please like the video, subscribe to the channel, give your comments. We will bring in parts word by word what is given in the Hindenburg report. Thanks for watching.